Hi, this is Mike, and we're looking at the Bitcoin chart. And I have left my last ideas markings on here. Been doing a little bit of thinking and analysis on this chart. Basically, the reason why I'm making this video is because there is a macro reason why I believe this type of thing will play out, right? Now, it may not play out exactly the way I've got it on the chart. This is obviously the artist's depiction on future price action, which is usually never a good idea, right? And to me, it's just an example of what can happen. Doesn't mean it will happen in this particular way. Now, as you know, I'm bullish the Aussie dollar and the euro, but for me, that's more of a last move up before a massive US dollar bull run. But in saying that, you must understand the macro reason why I believe Bitcoin will fall along with a lot of other cryptos. Okay, call them cryptos, call them tokens, whatever it is. They're all just speculative assets at the moment. And however you want to look at it, digital assets, everything's bloody digital these days. So if you want to use the word digital, crypto, whatever, everything's behind a firewall these days, right? Anything can get hacked. A bank can get hacked, right? Everything's digital. I work in IT. I understand that everything is digital. So the name itself is a little bit misleading, but it's definitely got some good marketing behind it. So the one thing that I have been talking about for a while now is interest rates. I believe interest rates is the reason why Bitcoin will go down fairly low, and then you'll get, the phoenix will rise from the ashes. Okay, or there could be many phoenixes. Depends on how you look at it, right? The garbage will be disposed of because there's a lot of garbage in cryptos. So for starters, you have to understand that the move up since 2008, 2009, whatever, all the way up until, you could say 2017, or you could say to 2020. Okay, these points here are of interest to me in this conversation. So I don't know if you remember exactly why Bitcoin was created, but Satoshi Nakamoto definitely put something on the Genesis block, a message as to why Bitcoin would be definitely a good way to preserve your wealth, right? And that reads, the Times, 3rd of January 2009, Chancellor on brink of second bailout for banks. Great. So what does that mean? Well, it means that interest rates will keep going lower. It's a sign that they will keep going lower. So what does that mean? It means that they'll print more money. Printing is not the correct term to use. They'll just basically stimulate the economy by continuing to create loans, push society to get loans to fill asset bubbles, which has an effect on inflation, right? Once you get to 0% interest rates, your inflation will either pick up or, if you're lucky, it won't. So, a couple of things with this. At the moment, we're seeing record inflation, okay? And it's a problem. So, the Fed has no choice but to raise interest rates. How high will they go? Well, if you're of the belief that interest rates won't go any higher, then sure, maybe you're a Bitcoin bull right now and you think this last move up is a reason to buy and go all in, maybe. On the other hand, if you think interest rates will go higher, you'll understand why I'm saying what I'm saying. Now, one of the videos I've been posting about since I started the AriasWave Trading View channel, basically, is I've been talking about interest rates and how I see them going a lot higher, right? Now, I'm going to turn the log scale off for this chart just to show you what I mean. So the move down since 1981 is a D wave. The move up all the way to 1981 was a C wave, right? So this was a zigzag wave D, right? So what comes after a wave D, you get a wave E. Okay, so we've already started the wave E. We've already broken a previous high, which was the wave 4 of the week type 1 week 5 wave move for wave C of wave D, right? Now you might think, oh, well, that wave C looks awfully long compared to wave A. Well, it depends how you look at it. Turn the log scale on and you get a bit of a different perspective here, okay? Wave A looks small, wave C looks huge, okay? Now that's the type of lowering of rates that they've done, you know, for us to get the kind of bounce that we've gotten, you know, since 2020 is indicative of the craziness that's gone on in these markets for a long time. So no, I don't think it's too long. I think it's weak for a reason. I think it's definitely something that has been formulated to be this way, but the length is still almost the same, right? If you turn log scale off. And typically when a chart is not that exponential, I tend to turn off the log scale, right? I believe oil is another chart that you should probably turn off the log scale when looking at it. Okay, so this is a wave D, right? And the previous history of interest rates goes back to 1100 AD for this pattern, which is unfolding and it's a giant zigzag, right? So what do I see happening here? Well, wave E for wave B completes. Once interest rates go this high, right, up to 20% maybe, probably to 15, maybe even 10. I don't know. But we have to see a wave E before we can see yet another massive cutting process of interest rates, which will complete the wave zigzag wave C, the wave C in brackets. Now, after that, we are going to get a lot of ups and downs in what would most likely be another zigzag pattern long term. Right now, we don't know what that's going to look like. We really don't know. But I would say it'll start off going once again, back up again, and it'll create the same pattern all over again in the opposite direction, right? There's only one zigzag that goes down in a corrective pattern, and that's a wave A, okay? Um, Before this 1100 AD pattern started, who knows? We might have had a very weak 5 wave move since the beginning of when they started recording bond yields, right? Who knows? The point is, we don't need to know. We just need to know what's happening now and that this type of thing is happening, right? Now, what's interesting also is that these things are never completely correlated 100%, right? There's always a level of lag between moves, right? Just simply take a look at the move since 2008 and compare it to a Bitcoin chart, and you can see that there's not a lot of correlation during those times, right? But the point is fairly clear that stimulus was a problem and has been a problem for a long time, especially since Bitcoin was created, right? But another thing, if you look at the percentage growth of interest rates since 2020, they've exceeded, they're like 1,000% almost. Up to this point in time, they're at 749%. 750% roughly, right? Now, if you go back to, we will go back to the Bitcoin chart now. Okay, turn the log on for exponential chart. And let's just go and have a look at the percentage gain since 2020 for Bitcoin. Okay, it's all the way up to 480%. Okay, sure, it went up to 16, 1700%, but it came back down, right? And interest rates, the bond yield has outperformed Bitcoin up to this very point in time since March 2020, right? Now, why did we get that type of move up in Bitcoin when interest rates were going up, right? Because for one, they didn't start going up straight away, like immediately. They consolidated at the lows for a while and then moved higher. But at the same time, during this period, you had a lot of stimmy checks, a lot of stimulus, a lot of direct handouts to support people in different ways. There's all sorts of schemes that were going on during that time, right? As soon as they turned off the supply of stimmy checks and other forms of, support and or made it harder to get it, you had to qualify. Well, this happened, right? So I don't think that Bitcoin's going to follow up the euro and the Aussie dollar, right? Yeah, sure, perhaps for the first time in history or something, right? But the point is clear here. The point is that on a macro level, there is interest rates to think about, right? Because, when the cost of living starts going through the roof, well, there's no choice but to increase interest rates. So you're either in the camp that you believe interest rates are not going up, you're a bull in Bitcoin. Otherwise, if you think they're going to go sky high, well, why would Bitcoin go higher, right? Discretionary spending, liquidity in the system, it's kind of drying up, and I think it will continue to dry up during this time. Okay, so all these charts connected together. That's why I focus on these particular charts. The US dollar and associated currencies, Aussie dollar, obviously I'm in Australia, so I follow it. The euro, which is inversely correlated with the US dollar. So to me, this type of thing may not look like this. Like I said, it's a 5-wave move up in interest rates, but there's always that lag. So what I'm trying to say is at some point there will be 5-wave moves down here, which I believe has already started, and it will go all the way to where it needs to go, wherever that may be. I don't know exactly where. It may not be this low in Bitcoin, but interest rates going through the roof. That to me there is it's a big giveaway as to what's going on here. A bit of a dislocation between cryptos and fiat is probably to do with interest rates, but also once interest rates, okay, so once the euro and the Aussie dollar hit the end of the current move higher, the US dollar is going to strengthen so much that it'll probably coincide with this move down in Bitcoin and also the move up in interest rates and when it hits that peak. All right. Now, mind you, at this point in time, I do believe that they will start cutting rates again, like consistently, like never before, maybe, like never before in recent history, right? But I don't think it'll be the first time in history. I think that it's just going to be meaningful for our time in history, right? And this is when I believe you should buy Bitcoin, when all that stuff happens, when its interest rates have basically topped and the US dollar has finished its crazy run that it's going to go on eventually. That's when I would buy cryptos, completely go all in or hand over fist or just dollar cost average or whatever. Who cares how you do it? I'm not a financial advisor. I'm just telling you my point of view. Yes, I sometimes take time to put out videos, but that's simply because there's not much happening, in my opinion, right? This recent move up in Bitcoin is basically nothing in the big, in the grand scheme of things, in the bigger picture view. Like I've mentioned before, if we just go to the other Bitcoin chart I have, right? I believe that we're going to see this mini wave E pump up to anywhere around, I think I said something like 6.618. Look, it might not even make it that far up. Who knows, right? Um, it's already starting to lose steam, this move, right? Relief rally, bear market rally, whatever you want to call it. And then I think we'll just complete this B wave at some point, and then we'll get another move down similar to this move here, right? For B wave, I believe the B wave, yeah, it's expanding lower. We might consolidate around this area for a while before we continue lower, right? Whenever the heat comes back on with interest rates continuing higher, I think that's when you're going to see this really start to fall. But for now, whilst interest rates, the yields are sort of consolidating after a record run, um, you know, uh, at this point, they've outperformed Bitcoin up to this point here. Bitcoin since March 2020 has only moved up 500% in total. So interest rates are already starting to outrun Bitcoin up to this point right now. And I think the bubble burst will continue to burst as time goes on. And having that particular view is not just a wave perspective, right? Because a lot of the times I put out views that are purely wave based. But in terms of the bigger picture, I believe there's reasons for it that make sense that don't have to include the waves 100%. I believe the waves can definitely be a good tool. But when you're talking about that kind of interest rate move, I think that there's big trouble ahead. And like I said, there's always a lag. Okay. Nothing's completely 100% correlated. There's always some kind of lag. Okay. So hopefully you found this video interesting and informative. Thank you.